Hello, everyone. This is Tim Allen with the Massey Group at Compass. It is July 19th, 2023. It is now quarter three, and here's your real estate update. Current state of the market, we're still dominated by a lack of inventory. Inventory is lower than that of 2020 and comparable to 2021. Three main factors that are causing the lack of inventory is one, we've had underbuilding really since the Great Recession. Two, we have people that are rate trapped, meaning they have I spoke about this on my last video. I'm one that's rate trapped. I have a super low mortgage rate right now. I also have equity. I want to go buy a bigger or different house, upgrade my house, but paying today's interest rates, when I look at the mortgage payment, it just doesn't make sense. So we're trapped in our current house. And the third factor is because, pick your reason, but real estate values across the country really are the highest ever. And I don't think anybody expected to have as much equity as they do. And, that versus a law that's been on the books since 1997, where as a married couple, you have a capital gains exclusion up to 500,000. As a single filer, it's 250,000. Well, most people have equity positions higher to that. And I haven't met one person yet that likes to pay taxes. Anyhow, so with a lack of inventory, the market is imbalanced again in the favor of the seller. Values peaked last year in April, May of 2022 because of the lack of inventory versus the demand this year and the imbalance in the market. Values have recovered to roughly June 2022 levels in the Contra, if we're looking at Contra Costa County data. But we are beginning to see some tapering or balancing. And, mainly what I'm looking at there is in the beginning of the year, the number of sales compared to properties hitting the market for sale far exceeded that number. Now those numbers are balanced. Is that because we're in the middle of the summer and people are taking summer vacations? That happens every summer, really. But also, I think another factor to consider is as we've had values increase and we have mortgage rates basically hanging out in the 6 to 7.5% range with the volatility of the 10-year Treasury. As values rise and those rates stay relatively fixed, you're going to slowly but surely knock buyers out of the market. And I don't, that's not sustainable. So that's where we're at. The two biggest challenges for buyers are A, I want the house, but B, how do I afford the payment? So a lot of lenders have gotten creative. We're creative in how we're putting together contracts to try to lower that payment as much as we can to make it more palatable to get you that house that you want. The other factor, and this has just been a factor really since the Great Recession, because of the lack of inventory, is how do I buy the house, but I need to sell my house. So how do I not sell myself homeless? And how do I do that without a major inconvenience and or a major cost? And there's solutions to that. We know lenders that you could just have a signed listing agreement and go buy your next home, move into that home, and then sell your existing home, and you remove the hurdle of your purchase being contingent upon you selling your existing home. So that's where we're at. Sellers are definitely getting rewarded. There's some hurdles that buyers got to factor into their decision. But where do we go from here? Well, the economy is kind of, in my opinion, in kind of this wait and see. There's not quite 100% certainty out there. There's some things that we're concerned with, but we are starting to see good data regarding inflation. There haven't been any banks that I've heard of recently that have had any issues. And the expectation is rates will come down eventually. If rates come down, sure, there'll be more buyers that enter the market, which will drive up demand, make it more competitive for the product out there. But if we circle back to the folks that are rate trapped, we should see more inventory. But my expectation is that will still be unbalanced in the favor of the seller. So we'll have this situation where there's more buyers out there creating more demand, probably be an imbalance compared to the product, which means that values will rise. I don't know if that's necessarily the best thing for the overall market or image of the market, because it starts, you start having discussions of widening the gap of affordability. But that's where we're at. Hope this helps. Again, I'm Tim Allen, Massey Allen Group at Compass. Reach out to me or my business partner, Ed Massey, if you have any questions, and have a great week.